Looking at so much macro data, we said, why not look at some more data that is coming in? But this is rather interesting as well. We're not looking at the economy and macro data in that sense about what's ailing or what's helping or encouraging, but we're looking at how you and I are making investments. Of course, this has started off by what's happening in the United States. A new Gallup study I should call it, a Gallup study that we've been reading has found that 58% of Americans own stocks in their investment portfolio. So this is based on their April Economy and Personal Finance Survey. The number that I just told you about, now that's something we understand is slightly higher than the previous 2 years. But if you look at statistically this number, it is not much of an increase, but it got us thinking about India and India's investment preferences. Here, the number of Demat accounts in fiscal 22, those Demat account numbers have jumped as much as 63% if you look at it on a year-on-year basis. In fact, post the pandemic, the number of Demat accounts has actually jumped over 2 times, and assets under custody, they have doubled too. According to that data, we've been pouring over from CDSL and NSDL. We've been collecting that data. Over 20 lakh new Demat accounts have been added every month since 2020. What does this suggest, all this data? Well, there is a surge in retail investments in the country. The causes may include easier access to online trading. A lot more of us are doing online trading. There is a surge in smartphone availability, so there is ease over there as well. And data is very readily available. So all these factors could be contributing ones. The pandemic, of course, had its own role to play because there was a lot of work from home and a lot of investments being done from home in spare time whenever we could find it, and there was quite a lot of it. But are these the real reasons? Let's get perspective on that. For that, my guest tonight is Prakarsh Gagdani. He's the CEO of 5paisa.com, and he's here to help us understand why we are seeing that spurt in retail investments. This, since the pandemic, it has clearly changed the world. Are you seeing the kind of surge that we are talking about in terms of equity investments? Are Indians favoring equity investments in one form or the other? And if so, what is spurring this love for equity is what I'd like to know from you.
Very good evening, Vikram. Thank you for having me on your show. So as you rightly said, it's been last 2 years, there is a phenomenal run everywhere, right from equity markets to the retail participation. Now, broadly, if you see why there is that kind of a participation that we are seeing for the first time in the history, where in just 2 years, the Demat account in the country has doubled. Now we are almost sitting at 8 crore plus Demat accounts. So what exactly went in favor of what we are seeing now? Broadly, I think it started off with pandemic, where, as you mentioned, that it was more of people being at home, and suddenly you realize that there is an importance of saving money, growing money, and then it was coupled with the easy access to the capital market. So that were the initial factors which brought people to the markets, and then we saw the rally in the markets. But I think broadly what has happened is the kind of returns that equity market in last 2 years has given. If you see across the board, Nifty has gone up by more than 160, 170%. Mid caps have more than doubled. So if you have an asset class which gives you that kind of phenomenal return, especially in the times where you have insecurity about your job, you have insecurity about your savings in the future, and then you don't have any other options of investment. I think that was the first and a very important reason why people came. And then it becomes like a herd mentality, which typically happens in digital. So if there is a product available and there is a problem which is to be solved, and you have a solution, then there are millions of people just hop on to that. It happened in with wallets when demonetization happened. It happened even in COVID. It happened with digital OTT platforms. It happened with video conferencing solutions. Suddenly you had a problem for which there was a digital solution available, and millions of people come to it. So I think it's a combination of multiple factors, but the bottom line is the kind of returns that the asset class has given over 2 years. I think that's one of the biggest reasons why you see the kind of rally. And then it's in a retail, in a younger lingo, if you say, it's like more of FOMO. So if is fear of missing out. So the next set of people who came was purely because they thought that they missed out on something which was such a good thing.
Yes.
And I think, yeah.
So when you talk about FOMO, it begs the question that what are the demographics of the people who are favoring equities more? Because at one point in time, we've always seen it as an asset class that is on the riskier side. And you tend to take more risk in your younger years. But we've seen that kind of retail participation grow among the younger demographic, or are we seeing it across the board? What have you observed so far?
So broadly, if you see, the retail participant is normally a mirror of our overall demography of the country, and that was not earlier. It is now. So earlier, because obviously, as you said, that equity was considered to be a riskier asset. Someone in the age bracket of 35 plus, where you have a very high disposable income, that's when you come to market. But what we have seen in last 2 years is a phenomenal change in the entire approach. We see that most of the people who are coming to market are in the age bracket of 18 to 25. I mean, talking about us, obviously I don't have the industry data, but talking about us, almost 35% of our customers are less than 25 years of age. And almost 76% of our customers are less than 35 years of the age. So in a way, it's really good, because if you start investing early, over a period of time, then you have an asset or an asset amount which is sizable. And the return on the investment that you get is also very good. So broadly, we are seeing that the younger population has come in a large number in capital market in last 2 years.
What is the route that they are taking to participate in the equity markets, Prakarsh? That is equally interesting, because SIP at one point in time was finding huge favor. Is that still the case, or are people directly buying shares and increasing their portfolio? With the increase in Demat accounts that we are seeing right now, what's the way that a majority of people who are now stepping in to this asset class, what route are they taking essentially?
So Vikram, if you see, there's the process of almost 4-5 years. Before pandemic, almost 2.5 years before pandemic, the investment into mutual funds started very slowly. And with all the campaigns that AMFI did, and again, even at that point of time, you had very little assets available for a retail investor to actually invest. And the first route of investment for people started coming from mutual funds, especially SIP. And that till 2020 was growing, and we had almost hit around 5.5 crore portfolios in mutual fund before the pandemic. So that was the first choice. Second, as always, it has happened that IPO is one of the biggest reasons why people come to capital market. If you remember, March 2020 was SBI card IPO, which was one of the big IPOs at that point of time. So that was the second way through which people are coming. But later on, when people realize that the digital players like us are offering Demat accounts practically on the mobile phone, where you don't have to go anywhere. It is not more than 5 to 10 minute process. That's where they came directly into markets and started investing into stocks directly. Though obviously the start would be to invest into large nifty companies where the brand names are known by the people. The stocks like Reliance or SBI or ICICI kind of players. But then slowly penetrated into the mid caps and the low value stocks. So I think that was the step-by-step investment that happened, which started with the mutual fund SIP, then coming into the direct through IPO, and third was the direct investment in stocks. The fourth phenomena, which became very big in last 2 years, is ETF investments. So the passive investment through exchange traded funds have become huge. The AUM on ETF is more than the liquid mutual fund, which is unheard of in India earlier. So these are the few ways through which retail investors are actually coming into capital markets.
So I want to figure out if any of this is goal oriented. A majority of it, any certified financial planner that you would speak to would say that whatever investments, whatever division that you see within the asset classes that you have exposure to must always be goal driven. Is that largely the case, or is it going back to your earlier argument that is it about FOMO and you just want to participate and you want to see your wealth grow? That's why people are getting into it. Is it being done for a specific purpose is my question.
So, there would be, if you look at maybe 5 years, 10 years back, or maybe 15 years back, people used to invest with a long-term goal of a retirement, or maybe, my child's education or marriage. I think that has changed, because today's generation, typical millennials, don't see what they're going to do for next 20, 30, 40 years. Mostly what they are looking for is what's this asset class or an instrument or a product has to have offer to me for next maybe 12 months, 24 months, 36 months. Having said that, obviously investing in equities for long term, but looking at the usual behavior of a millennial, of a younger generation, I think they have a short term view about everything in life. And I think they are just exploring and starting to invest. I think over a period of time, then they will figure out in terms of that it's a long-term asset and how to make it, make it more structured so that their long-term goals can be achieved. But I think the first success is something that they've tasted with the returns that they've got in last 2 years.
They say that think for the long term. Maybe their vision for the moment is short term, but one can only hope that you kind of expand that, looking at the kind of returns that you're getting, and the power of compounding is never lost on any of us. But you have to be patient and not be too reactive the way the markets are sometimes, because volatility can sometimes drive people away and sometimes make us more traders, which is certainly not what we expect investors to do. But thanks very much, Prakarsh. It's always a pleasure talking to you. Great having you with us for that perspective on how we are investing in India and how that entire roadmap and approach is changing.